Chapter 7, P7-25A. Okay. So remember, what we're trying to do is we're trying to explain the difference between what we have in our checkbook, which is the company records, and what's on the bank statement. So what they're trying to do is they're trying to emulate what a bank statement might look like. Of course, your bank statement's it's probably gonna look a little different than this, but it gives you the basic information. It has the beginning balance and the ending balance, right? Then it has all of the deposits that had cleared the bank. What do I mean by cleared the bank? You go down to the bank, you make a deposit. It's not going to show in your balance right away. It might take a day, and then it's going to show up in your balance. Okay, so by clearing the bank, that means it cleared the bank and it's showing in your bank balance. Okay. The thing about that is, as soon as you make the deposit, it's already showing in your books, in your cash, your general ledger account for cash. Okay, so that's why we have these differences. Can't get rid of that blue stuff. Yeah. All right, and then checks. Those are the things that are going out of your bank account that have cleared your bank account. So why don't we look at some of the terminology here? Probably easier to explain the terminology in the context of a problem. What is EFT? Does anyone know?
Electronic fund transfer.
Yes, electronic funds transfer, right? That means that they basically either wired the money or they transferred it between accounts electronically. There's a commercial now, I think it's American Savings Bank, where the two ladies are sitting having lunch, and one lady picks up the tab, right? And the other, she tells her friend, oh, you could pay me back later. And the other lady says, no, I'm going to pay you back right now. And she does something on her iPad or her phone and shoots the money right over to her friend. So that would qualify as electronic funds transfer. Back a few years ago, it was a lot harder, right? You had to call the bank and have an approval and fax in a signature, and then they would wire it over to someone else's account. But they're making it easier and easier, okay, to electronically transfer funds. What is BC? You guys read, huh?
Bank
Yeah, well, in this case it's a bank collection, yeah. That means the bank collected it or credited your account. This is a good one. NSF.
Not sufficient fund checks.
What is that?
title.
What's that? You wanted to say it.
No.
Well, give me another name for it. You got another, it's someone. National Science Foundation. What is a good example of that? Just in layman's. Have you ever gone into like one of these local restaurants? I cannot think of one right offhand. Or maybe a store, and then they have this check sitting up there. And they used to do this. I don't know, it might be illegal now. And it says, don't accept a check from this person because the check bounced.
Oh, yeah.
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 You seen that? Still see that?
Yeah, if you go to Kailua in the Chinese restaurants,
They-
it's all on the table.
All the bad checks.
Yeah, just under the little glass thing.
So that's what this is. That's a fancy way to say this check bounce. Non-sufficient funds. That means that the person or the company that wrote the check didn't have enough funds in their account to cover the check. Non-sufficient. So a new way to say that. Go home and practice. That's a non-sufficient fund check, right?
Like, bro.
Or when your friend tries to pay you, are you sure this is not a non-sufficient fund check, right? Or is your check good, right? Same idea, right? Okay. So you got a bunch of stuff. You can have an EFT going in, or you can have an EFT coming out. You can transfer money in or transfer it out. So that's why you have it down here in the other debits thing. So watch this. This is going to throw the screwball in the whole debits and credits thing for you. Okay. But maybe I can give you a way to think about it. On your bank statement, right, money coming in is called a credit. Okay. To this point, I've been telling you when you increase your cash account, you debit your cash account. But for your bank statement, they're showing an increase to your account, your cash account, as a credit. Okay. But think about it this way, flip it around. Make yourself the bank, okay? And think of this as the bank's record, okay? If the bank takes money from you, they actually owe you that money back. So it really is a credit. It's like increasing a liability for the bank, right? They just show it as a credit on your bank statement, okay? But it's, if you think of it from the bank, if you're the bank, it really is a credit in the terms of financial accounting, because that's an increase to a liability for the bank, right? Take that $4,180 credit they have there. That means your account went up by $4,180, right, on December 5th. That means the bank owes you another $4,180. So if you were keeping the bank's books, right, this is what it would look like on the bank's books. It would be cash, debit, and then it would be a credit to accounts payable. In a nutshell. I mean, they probably have a different payable account that they call it, right? That's the credit they're talking about, right there. Okay, that's the credit. Okay, for us on our books, right, we're going to treat it as a debit to cash. Okay? So it kind of flip-flops here, but don't let that throw you off. Just for this moment, or for when you're looking at the bank statement, you can go back to your old way of thinking. Okay? So let's see. They want me to balance this bank account, or reconcile it. Okay? So the first thing we're going to do is we're going to take the bank balance and reconcile it down to a corrected balance, or what they're going to call an adjusted balance, adjusted bank balance at December 31st, 2015. So you start with the balance from the bank statement. So you get your bank statement in the mail, and the balance is, the ending balance is $17,970 at the bottom of the bank statement. $17,970. Okay. Now our job is to make sure that we capture everything on the bank reconciliation that's showing in the books but is not showing on the bank statement. So we're comparing our book data, our accounting record data, which is over here. We're comparing it to the bank statements information. Okay, so you kind of look back and forth, okay? And the first thing I'm going to do is look at the cash payments. Okay. So I got a $840, I'm sorry, $4,180 cash receipt on my books. I come over here to the bank and it's sitting there. So I can check that off. If you were doing it with a pencil, you could put a little check mark saying, okay, it's what I have in my book records is on my bank statement, $4,180. Okay, I got another $500 here on the 9th. See, it cleared a day later, but it's still the same 500. Check that off. I got 550. Okay, the bank shows 550. Right? I got 2,130 on the 17th. Cleared the bank on the 18th, 2,130. Okay? On the 31st, I got 1,820. The bank's not showing that. Okay, so that I've just identified what we call a deposit in transit, meaning that I made that deposit on the last day of the month, but it didn't clear the bank yet, because on the bank's statement, as of December 31st, it has not cleared. It's not going to be part of this 17,970 balance because the bank's not showing it as a credit to the account. So I need to add that. When I do the reconciliation, I'm going to have to add this deposit in transit because I want to make the bank balance the right balance. I need to adjust that balance. Okay, so it's going to need an additional 1,820 right here. Okay, we've identified it. You see how I identified that amount? It makes sense. Because sometimes your eyeballs are going to bounce around and you're going to think, oh, I should be looking at the bank statement back to the book statement. But when you do the bank side of this reconciliation, you look from the book statement to the bank statement. Okay. When we do the book side of this, we're going to go the opposite way. Okay. So I'll make a subtotal here, and we can add up. When in doubt, use your calculator. 17,970 plus 1820. So we got a subtotal. Now we're going to look for the things we need to subtract. Okay. So what I need to do is I got to look at my book records, the records that the company has, and that's what this table is. And I got to look at these payments that we made and see if they came through the bank. Okay, so check number 1416. I see check number 1416 coming through here. $840, $840. So that I would check that off. I would check it off over here where my arrow is. Okay. Check 1417 comes through. I'm looking for both the check number and the amount. $120. Okay. Check 1418 comes through. 640, 640. Check 1419 comes through for 1490. Okay, the bank recorded it at 1940. So there's a transposition there, right? See, my check in my records is showing check number 1419, 1,490. The bank recorded it at 1,940. So they flip-flopped, and we don't know who did it wrong, right? We got to do a little more reading here, but it's either we wrote it down wrong in our records, or the bank wrote it down wrong on their bank statement. But there's a transposition. There's definitely a difference for that check number. So maybe they tell us a little more. Oh, we have an additional information tab here. Let's look. It says D, the correct amount of check number 1419 for rent expense is 1,940. So what happened was, it sure looks like to me that the check was actually written for 1,940, but we recorded it in our records at 1,490, because when it got processed through the bank, they looked at the check and it had the right amount, 1,940 on it. So we don't have to do nothing right now, right? The bank is correct. So we can treat that as clearing the bank for the correct amount, even though it's recorded in our records at the wrong amount. Okay? And we can move on. Okay, now I got my first one. Check 1420, and I'm looking at my bank statement too here. It looks like checks 1420, 21, and 22 did not clear the bank. So these are going to be what we call outstanding checks. So I got these outstanding checks, meaning they're still outstanding. They haven't cleared the bank. And it's going to be check number 1420, 1421, and 1422. And those amounts come right from my check register: 1,470, 900, and 610. Okay, and again, we can add them up. So just adding up those three numbers. 2,980. So because they did not clear the bank's balance is showing too much. It's showing 2,980 too much. Those checks should have been subtracted. So what I'm going to do is I'm going to subtract it. I'm basically subtracting 2,980 from the bank balance to take the bank balance down to the corrected amount. So we can subtract that from undo. It belongs down there. What did I say it was? 2,980? Okay. Anybody got questions on what we just did? we took the bank balance and reconciled it down. We took the additional information that we know and reconciled it down to a corrected balance or an adjusted balance. Think about that for a minute. Now we're going to do the book side of it. Okay? So now we got to reconcile our book balance. And what we want to do is we want to reconcile it down to this exact same amount. Right? So we're going to show the differences that take our book balance down to 16,810. Okay? So we get the same set of things up here, and I'm going to flip-flop them. So now I got my book records here on the left. This is where I want to be looking first. I mean second, right? And I'm going to look at my bank statement first. But I'm going to take my book balance and put it up here. So my balance as of December 31st, and you got to look around, but they tell it to you up here in this sentence. Right? My book balance, it says Duffy's cash account shows a balance of 16,610. Okay? Now what we want to do is we want to look at these. We want to start with the deposits that are showing on the bank balance, right? And we want to look back and make sure they are on our cash receipts for our records, okay? So I'll start with the first one. $400 EFT. Come back over. That $400 EFT is missing, right? So that's going to be something that we need to add. Okay, and they give us a little more information, right? It says that first EFT was for the collection of rent. So what happened is the bank collected the rent directly. I don't know how many of you pay your rent directly into your landlord's account. Or do you go and always give it to your landlord, right? A lot of times the landlord will set it up where you can go down and just put the check into the landlord's account or electronically transfer it, right, into the landlord's account. So that was the EFT for rent. I'm going to put it in here. That's something we're going to be adding, $400. Okay. Then we move on, okay? And realize we could have been doing this thing simultaneous, right? We could be do bank and book at the same time because we're looking at the same documents. But I'm walking you through this, so there's going to be a little bit of redundancy. The 4180 is there, 500 is there, 550 is there, 2130 is there, okay? Now, 1,100 is not on our books. So that's something else we're going to add. And that BC, the bank collection, it says here in C, the $1,100 bank collection was for a note receivable. So the bank collected this company's note receivable payment directly for them. It didn't go to the company first. Okay? So this is a bank collection of note receivable. That's going to get added, 1,100. So we got 1,500 subtotal that we're going to add to the book balance. Okay? So you can take your book balance of 16,610 and add 1,500. And we get 18,110.
Where'd you get the first number again?
The first number, the collection of the rent, I looked over here.
The balance one again?
Oh, the balance. Right up here. Yep. Okay. Now we're going to look at the disbursements that are showing on the bank statement. So come down here. First one, I'm going to look $500 non-sufficient fund. Okay. That's not showing. Actually, I'm only showing checks on my cash payments in my records. Okay, so I need to put that 500 non-sufficient fund check 500. So that's the amount of the check. This is the way it probably went down. We collected $500 from a customer. They sent us a check for a bill that they owe, right? And we took that check down and we deposited it but when it ran through the bank, it was no good. So we're going to have to actually reverse this check out eventually. So we're going to subtract that from our balance for our records. Right? Technically, I'm subtracting that 500 from this 16,610. Okay? The original balance. Okay? Next thing, 840, check number 1416. We already took care of that. Okay, we got an EFT. There's no EFT showing on my books. $300 EFT. Let's see. Does it say what it was? The EFT credit was for a receipt of rent, and the EFT debit was for insurance payment. Okay, so we're going to have a EFT payment of insurance, $300. Continuing on, 120, right? We got the 120, 640 for check 1418. We got that. Okay, here it is. 1940. Okay, we're showing for check number 1419, 1490. Okay, so we're showing we're short, right? And you probably want to get the difference between the two. So you got 1940 minus 1490. We're short by 450. So because we didn't record the full amount of the check, we have to subtract that 450 to get our balance down to the right amount. Okay? That we didn't record enough under that check number. We didn't record, we're missing 450 on that check number. So we can put that over there and we can say this is a correction of a book error. Remember, the bank did not make the error. We made the error. So we're correcting our book balance. Okay? Then you can keep moving along. Okay, I got a $50 service charge. That's not showing on my books. It's not showing. Okay, so we got $50 more that we have to subtract, and let's just make sure that it was a service charge. Nothing else in the additional information, so I am assuming SC is service charge. Okay. So if you add them up, you got what do you got? 8, 1250, 1300. You might have different numbers than me, and you may want to just double check. And it looks like it is 1300. So if I take 1,300 and subtract it from this subtotal here, 18,110, I get 16,810. And before you submit this, it's stuck. Huh. I gotta get that negative sign off of there. Sorry about that. Okay, there you go. Make sure you label it. This is our adjusted book balance. And then the other thing you want to do is you want to make sure it matches. So if you look up here, we reconcile down to 16,810. And for the book side, we reconcile down to 16,810. So it's in balance. Okay. Let me show you something real quick. I'll show you how this might look in a different situation. Okay. Oh, it's not letting me do that. Anyway, a lot of times we would put it side by side. So this piece here, the bank piece, I probably would have sitting here on the left. And then I would take this book piece here and having it sit right up here next to it, side by side. So you can see that it's truly two separate reconciliations that come down to the same balance, the 16,810. In this situation, they stacked it. They did one on top of the other, which is fine. Me personally, I prefer to have it side by side. So I would have my bank reconciliation sitting here on the left, and then just imagine if I I was about to do that, but if I took this piece and just moved it up and had it on the side over here, it would be sitting side by side. You could see both of them together. Okay? Questions so far on this? This is a job skill, right? You can reconcile them. You come in, a new accountant, they might have you reconciling a few of the bank accounts. Because there's a lot of bank accounts, right? You could be reconciling some stuff. Okay. Now, once we've reconciled, we got to make adjustments. We got to actually make journal entries to make our books right. We need to take our book balance of 16,610 and get it down or get it up to 16,810. So we got to make adjustments for all of this stuff that we considered reconciling items. We got to make actual journal entries. Why wouldn't we need to make journal entries for the top stuff? What's the logical answer? How come I'm not going to make journal entries for the bank statement reconciliation?
Because the bank.
Yeah, I don't have control over their books. That's the bank's books, right? So I can make adjustments for my company's books. So let's start with the first one. If there's a EFT collection of rent, think about it. We got more money, right? So when we get more cash, what do we debit?
Cash.
Cash. So I'm going to debit cash. Now what would I call that rent? We made some money, right? Allowing people to rent.
Rent revenue?
Rent revenue. Okay, so you kind of know this stuff already. $400. Okay, and then watch out with this one, because sometimes they want the memo. This one wants it. It wants a memo down here too. So it says to record rent collection by EFT. Okay, then I'll take the next one. Actually, it tells me which one to do next. Journalize the collection of the note. So let's see. How much was the note? 1,100. We collected 1,100 on note. Well, again, more cash coming in, so debit cash 1,100. And credit note receivable. Right? They no longer owe 1,100. So the note receivable, which is an asset, is going to be decreased with a credit. And we can put in a to record note receivable collected by the bank. They collected it for us. Okay. Next one, journalize the non-sufficient fund check. So with the non-sufficient fund check, you probably need to think a little bit, think back a couple steps. So what happened first was you debited cash and you probably credited accounts receivable for the collection from this customer. So let's see, how much was it? Hold on, 500, right? So this is probably what happened first when you collected it. Okay. Then you went down and you made the deposit, you took it to the bank. The bank tried to clear the check and the customer's account didn't have the 500 in there. So they couldn't honor the check, and they kick it back to you as an NSF check on the bank statement. Now you get this thing back. What should you do? You should just reverse what you did originally. You should make sure you put it back into accounts receivable to show that the customer still owes us the 500, but you have to reduce your cash account. So you're going to credit cash. Credit cash, right? Not cash, right? Credit cash for 500. That's what we're going to plug into our answer. Okay, but you kind of need to think back to what happened, right? You got to know what happened. So for 500, put it back into accounts receivable. Credit cash. Cash is too high because that check was no good. Okay.
The one before that, where you get to 1,100.
1,100, I'm getting all my numbers right from my bank statement reconciliation. So right here, you can see the highlight. Does the highlight come through? The blue? Yeah, okay. So I'm going right down the list. Okay. We made a payment. So we paid 300 for insurance. Okay. I will debit insurance expense 300 and credit cash 300. Okay, this is the bank's. We're doing this to record the payment of insurance by EFT. Okay. Now I have a service charge. So the next one is a $50 service charge. I did the service charge after the correction of the error, but they want me to book the service charge first. So that's going to be booked to an expense. So I will call it bank expense. And it's a credit to cash because they took it right out of my account. They took the cash right out of my account. And that's to record the bank service charge. Okay, and then finally, journalize the entry to correct the error. Okay, so we wrote a check for 1940, right? So again, think about it, right? If you write a check, you're probably going to be writing it to accounts payable, right? And if we recorded it for 1490, okay, when it was actually supposed to be 1940, right? So 1490 right? We already figured the difference out, but 450, that means we should have booked an additional 450 against accounts payable. So you would tack on another 450, okay? So let's see. And I would check this once more just to make sure. Let's see. Yeah. Why don't we book it? Maybe it was for a specific expense. Does it say?
Rent expense.
Was it for rent expense?
That's what mine says.
Yes. Okay, so we don't have to put it to AP. We can put it to rent expense. So the 450 difference will go to rent expense, 450, and then a credit to cash, 450. And this is to correct let's see if we got the right choice. To record error. Which one do you like?
The check one.
Okay. And over here, this would have been, this wouldn't have been AP, it would have been rent expense. Just so we don't throw you off, okay? Something like that. Any questions on this one? That's a really good one to